Welcome to today's episode. Before we start, please hit the subscribe button and also turn on your notification bell to be notified of any new uploads. Now let's dive in. While the masses' attention has been diverted to the latest conflict in the Middle East, the BRICS member countries are focusing on de-dollarization. The bloc has been making great strides in order to create financial systems that do not involve the US dollar. The BRICS Bank, commonly called the New Development Bank, NDB, has officially announced a 3-year plan to completely end reliance on the US dollar. The 3-year de-dollarization initiative will lead to BRICS settling trade in local currencies and not the US dollar. The NDB is finding alternative ways to replace the US dollar from dominating the global financial sector. NDB will provide details to BRICS leaders highlighting the means to diminish transactions made in the US dollar. The NDB has already outlined its first idea of lending loans to other developing countries in local currencies. The bank suggested stopping lending loans in the US dollar and limiting the number of settlements in the USD. The move adds pressure on the dollar, making its demand decrease by a smaller margin. However, the 3-year de-dollarization initiative could add further blows to the prospects of the US dollar. The NDB would provide guidelines to boost the usage of local currencies to strengthen the native economy of BRICS nations. Businesses in developing countries could thrive if local currencies are put forward, as they don't lose out on forex charges. Therefore, the global financial sector could change rapidly by 2026, leading the way to a new world order. The financial power could tilt from the west to the east, and developing countries could take the driver's seat. BRICS already controls 30% of the global economy, and the numbers could shoot up if they completely end reliance on the US dollar. BRICS Pay, a decentralized multi-currency digital international payment system, acts as the next iteration to make trade in local currencies. According to their website, BRICS Pay aims to enable digital payments between different countries in the BRICS Plus format, allowing businesses and consumers to securely and seamlessly make and receive payments in their local currency. The platform is designed to reduce the cost and complexity of international payments, while also providing a secure and reliable way to pay for goods and services. The BRICS member countries are focusing on de-dollarization and using their respective national currencies. The new payment system will accelerate this process. BRICS Pay set benefits from a combination of traditional payment systems and new technologies such as central bank digital currencies, CBDC, decentralized finance, and tokenized assets, secured money. BRICS Pay is an expansion of payment options for companies and citizens of participating countries, as well as for the entire world and all existing or emerging payment solutions. BRICS Pay also promises that, through the use of open API, the BRICS Pay system will ensure that customers have access to their accounts, no matter what payment system they use. Funds can move between systems faster and more securely. The system was first launched in 2018, but has not received a lot of notoriety. But due to recent divisions between BRICS nations and Eastern allies versus the United States and the West, BRICS Pay is being re-emphasized as a way to circumvent the dollar. In 2019, the Silk Road briefing expressly reported that BRICS Pay was being created to avoid US dollar trade. It said, China and Russia, in particular, have been highly critical of the United States' de facto use of global payment systems, which have been used as trade and sanctions weapons to either inhibit or punish nations whose policies do not fit with those of Washington. Both have been actively seeking for some time now to de-dollarize their trade, and the BRICS Pay system is a major step in that direction. Part of the move away from American-denominated cards was instigated by US sanctions 2 years ago, in which many ordinary Russian citizens in Russia found themselves unable to access cash via their Visa and MasterCards. The United States had switched them off the global payments network. Similar situations have also occurred in Turkey, and more recently in Iran. These, and other countries that have been subject to what many refer to as US bullying, will be looking at the BRICS Pay scheme with interest. Earlier this month, Iran, one of the newest members to the bloc, indicated their interest in switching to BRICS Pay instead of SWIFT. During an open session of the Iranian parliament, Mohammad Bakr Kalibaf said that Iran will access BRICS Pay starting January 1, 2024,
after the problems they faced using SWIFT. That gives us a major chance to work with big countries, he emphasized. He also noted Iran's access to BRICS Pay would eliminate the need for access to SWIFT. The UK Standard Chartered Bank has integrated BRICS Pay into its digital payment platform to enable its customers to make payments to other BRICS countries. The system itself uses blockchain technology. However, it is not a CBDC or cryptocurrency. It is a digital service that does not have a single acceptable currency. In turn, this allows any of the BRICS members to use their own native currencies. In addition, the State Bank of India has launched a BRICS Pay-based mobile app for cross-border transactions, while Russia's Sberbank has partnered with the payment system so that its customers can make cross-border payments. The Bank of China has integrated BRICS Pay into its systems, as has Beijing-based ICBC, one of the largest banks in China. It has also adopted BRICS Pay for cross-border transactions. In Brazil, Petrobras has begun to use BRICS Pay for cross-border transactions as well. At the root core of BRICS Pay is the New Development Bank, sometimes referred to as the BRICS Bank as it is collectively owned by BRICS member countries, where all financial transactions between BRICS nations are processed.
More recently in September, Russian state media TASS reported that they looking into alternatives to the SWIFT international payment system, and this will be an important topic for BRICS heading into the year. Russian Finance Minister Anton Siluanov said during a forum, "We are trying to introduce our financial messaging system, the SPFS. Our Chinese colleagues have their own system, and other BRICS countries also either have their systems or are creating them. This is why this issue is to be discussed by money authorities and financial agencies of BRICS member states, and next year, it will be one of the issues on the agenda of this organization's meeting." It added, Siluanov stressed that Moscow is removing all ties from the west to the southeast, and that the trend will persist in the future. However, South Africa's finance minister Enoch Godongwana said at the BRICS summit this past August that the BRICS payment system is not designed to topple SWIFT. It's not an alternative to SWIFT. It is a payment system that facilitates a deepening of the use of local currencies. You must have one central bank. You must lose your monetary policy independence. It's a major challenge, which would imply, in our case, major constitutional implications. Amid the landmark of BRICS expansion, China's trade with the U.S. has dropped a remarkable 14% from the first half of the year to a year ago. Moreover, China has placed the blame for the trade decline on the United States, specifically stating that it is due to export tariffs that the Western nation has enacted. China's ambassador to the U.S., Xie Feng, noted export controls as the key decider between lessened trade relations. This is a direct consequence of U.S. moves to levy Section 301 tariffs on Chinese imports, abuse unilateral sanctions, and further tighten up export controls, Feng said. Feng added, "The livelihoods of many families have been affected, and businesses from both countries have borne the brunt." Moreover, the development is significant, considering the U.S. remains China's largest single-country trading partner. However, it could eventually lead to increased trade activity between the country and its BRICS counterparts, especially as 6 countries have just joined the economic alliance. China remains one of the most vocal advocates of the expansion of the BRICS membership. Now, it is likely to turn its attention from Western trade to interbloc transactions that support its local currency promotion initiatives. Thanks for watching, and see you again in our next episode.